The content on this channel is for informational and educational purposes only. Please contact a professional when it comes to your financial needs. There's an old saying that I can show you better than I can tell you. And that's what we're going to do right now, right here. We're going to show you how to save and earn interest on your cryptocurrency holdings and how that differs between that and a traditional bank savings account. Now, we're going to talk about the reasons why that is, but we're going to get into it right here, right now on the Ujamaa Network. I'm Antoine Anderson. Let's get to it. Now, for our example, I'm only going to use a small amount of money, like $25. Put $25 in each account, one in the savings account, and then 25 into a crypto. Let's go. Now, for my example to work, I'm going to start with a clean slate. I'm just going to go ahead and transfer some money into an empty savings account. So here's my accounts. There's nothing in my savings account. I'm going to go ahead and just move some money. I'm going to transfer the money. We're going to take from my business checking account and add a location to transfer it to. And that's going to be my savings account. And we're going to do $25. And this is just what we're going to call crypto exam. Nah, let's just call it savings test. And let's hit next and initiate the transfer. And we're done. Now, for our crypto, all crypto exchanges are not equal. Sometimes there are some areas where you do not have the ability to earn a percentage on what you're putting in your savings. What these savings accounts or these earn accounts are you're putting up your cryptocurrency in order to earn a fixed interest rate as others are trading on the platform. Now, we'll get into the reasons why this is a good or bad idea, but I'm just going to show you the ins and outs of setting up and putting funding in your accounts so that you can make your own informed decisions on how to go about this. For our example, we're going to go ahead and use a Kraken account. And right there from the home page, we're just going to go over to earn. And these are the assets that they are having available for you to earn interest on trading activities. So I'm just going to go ahead and buy out of all these here. You got Solana, you got Ethereum, Cosmos, whatever. Let's go ahead and do some Ethereum this time. I'm going to buy, and I'm going to say about $25. Like I said before, I'm going to go ahead and review. Click that I understand and confirm. And now let's view our transaction. There it is. We're not done yet. Let's allocate a percentage to earn. Got your Ethereum. Let's do the max. Review and confirm. And now let's take a look at what we've done. We're still on the earn. We're bonded it to earn. We're not going to touch this $25. And we're going to see what the lifetime rewards is. The next payout is going to be in 5 days. So we're going to come back in 5 days and see how much this $25, well, $24.32 has earned us. Now, that example I just showed on Kraken was an example of staking. That was a bonded yield. We can't touch that. That's locked up. What we're going to do is go back into the app and do something called auto earn. And this is going to be a game changer for us, okay? Now, it's a good thing we caught this before we went ahead and produced this video. That's that bonded earn, and I've already staked about 25 bucks with Ethereum, but that's staking. Let's go ahead and look at auto earn. Let's go and click on that, and you see I've got no earn balance on this thing. So I'm going to do the same thing. This time I'm going to use Bitcoin. I'm going to buy $25 worth of Bitcoin. I'm going to review it, understand what I'm buying. Alrighty, we've bought it. Let's go ahead and close. Now, like we said before, we're not done. So let's go ahead and look at our portfolio. There's 50 bucks in the portfolio. Go back to earn. What type of earn? It's a bonded earn. Now you see $24.39. Again, the fees are a little bit different between the two, but that's what I have available for auto earn, making up for just about $50 minus the fees. So we funded two accounts, a traditional savings account and two types of crypto accounts where we're staking some crypto at $25 and I'm actually earning interest, which I can pull in and out with the auto earn. Gives me a little bit more freedom on the Kraken app, and I'm going to go ahead and use that to show you the difference between all three. Now, what are the downsides of doing this? Well, number one, cryptocurrencies are notoriously volatile, right? And because of that volatility, that risk, we have a potential there to have another Sam Bankman-Fried and all your crypto could be gone overnight, whatever, right? But the biggest drawback that is going to hit you right off the rip is the fact that anything you put in a cryptocurrency is not FDIC insured, meaning that it's not like a traditional bank. If the bank goes under, there's an obligation to pay that deposit back. You got a bunch of deposits. People are going to sue you, bank, until you get all of their money back, not just portions of it because you didn't invest it. You were saving your money, and the bank was doing things with the money that it was either was or wasn't supposed to do. But as long as you get that money back, FDIC insured accounts make sure that happen. That's why you'll see that FDIC logo on all your bank teller windows. Hey, that's letting you know when you put your money in a bank, a traditional bank, it's there. That does not exist in crypto. That's number one. Now, let's talk about some of those upsides of doing this. The interest rate on bank interest is ridiculous. It's laughable. It's not even interest. It's just I'm going to put some money in the bank until the bank decides it's want to charge me fees for just having the money there until it's all gone, because the interest rate on a traditional savings account is abysmal. And this is why banks are losing so much money to cryptocurrency, because you're not even paying a 2 to 5% interest on your deposits. It's really ridiculous. Now here's a little chart of what we're talking about right here. Now, this example is just between an online bank and a regular brick and mortar. You're still getting really terrible interest rates of 1%, but a traditional bank is not even paying 0.5%. Now, contrast that to what was going on in 1988 when I was graduating high school. Man, it was like 10, 14% interest on your savings. Crypto doesn't do that consistently, but that's what it was. You could literally put some money in the bank, earn some interest, and if you're doing compound interest back then, you had a car. That's how I got my car. My first car was by using compound interest, and that was a game changer. It just does not exist anymore. So what it comes down to is this one more thing why the younger generation hates Generation X, because we had it good when it comes to banking. We didn't have to worry about such things. We didn't have the expenses you guys kind of take on. We definitely didn't spend the kind of money you did dropping on clubs and whatnot. But the bottom line was everything cost a lot lower, was a lot less, and benefit to saving was a lot higher. You're looking at $1,500, $2,000 worth of rent. It was like $300, $400 tops for the same apartment probably, and they were brand new when we moved into them. You're still living in them. Think about that for a second. That same apartment block that your parents grew up in, if you're still in the hood, was like $400 to $700 a month. Yeah, yeah, you guys are down bad right now. And why? This word called inflation. And then there's wage stagnation. Wages never came up. And when you look at all of those factors and you turn around and look at interest, where interest has gone down, you can't even save your way out of this problem. There's no other way, which is leading us back into that discussion of the quick money epidemic that happens in the African American community. We need that money fast. We need it yesterday. And the reason we need it is because things are so expensive in relation to what we actually earn. This is one of those things. Now, I'm not going to tell you what to do, but I'm going to show you the results of our little example in about 5 days and just see how much more my savings account grew on crypto versus my savings account in a traditional online bank. Let me know what you think in the bottom. I'll talk to you very, very soon.